Hello everyone, it's the Canadian Futures Trader here. Welcome to the channel and welcome to the video.
Gotta get more followers.
If you have not already, be sure to subscribe, turn on notifications, get notified every time I put out a brand new video. Guys, today's video, I'm going to be going over some Treasury trading. I'm going to go over 4 things that I look for. Now, these aren't hard and fast rules. I'm not saying watching this video is going to make you a Treasury pro. But I do get requests like, what are you looking for? How do you trade the treasuries? So I kind of want to cover some basics, and then I just want to go over some other things as well related to kind of context and why every situation is unique. I can't tell you, hey, when you see this, do that. It doesn't work that way, unfortunately. But that said, let's start with a few things before I get to the points that I want to make. So this is obviously Jigsaw Daytradr. It's the software I use. There's a link down below for Jigsaw. Unfortunately, they do not have any type of free trial. They do have a money-back guarantee, so if you did buy it and you were just like, I don't like this at all, you could get your money back in the first, I want to say it's like 30 days. It is really geared more towards depth of market trading. They do have other features, and I'm going to make a different video covering some of the other features that Jigsaw has. But if you're looking for like a classic kind of charts and indicators, this is not going to be for you. I just like to be honest with you. For trading the treasuries, I personally believe it works really, really well. If you are an order flow trader, scalper, this is what I would recommend. There's really not too many great options out there, and Jigsaw is like one of the top ones. When you watch a lot of other channels that have anything with depth of market up on their screen, a lot of times it's going to be Jigsaw's product. So that out of the way, just to explain my screen really quick, I primarily trade the Ultra Bond. So on the very right here, I have the Ultra Bond ticker tape. Now this is a Sunday evening. It's very slow, and that's by design. I wanted to choose a time when not much was happening because it will give me time to point things out without the price moving all over the place, and my point will kind of be lost. I'll be able to point out things like, hey, see this 130 here? And I'll be able to talk about that before the price flies away and that isn't relevant anymore. I mean, you can see even just now that disappeared. So on the right-hand side, I have the ticker tape, essentially. I have mine filtered, so it only shows trades that are 5 lots or greater. I do that just to filter out all the little 1-lot traders. In the evening, they count a bit more, but during the day, this could fill up. But if it's a bunch of 1-lot traders, it's really the guys who are throwing around bigger size that make a difference, and that's what I want to see. This is a power meter. All this is honestly doing is representing information you are seeing here in like a graphical format. On the left is the last 60 seconds, the buy and sell, and on the right is the last, I forget if I have it set to 15 or 30 seconds, the last trades. So again, just a graphical representation of the tape, and honestly a graphical representation of what's happening on here. So I have 4 depth of markets up here. I obviously use a custom color that I set up myself. It's normally blue and red. That's all customizable in Jigsaw. On the right here, this is the Ultra Bond, and next to it is the 30-year Treasury. Next to that is the 10-year. Next to that is the 5-year. I watch all 4 because they do move in tandem. You might notice even right now, I haven't explained everything on the screen here, but they're all trading at pretty close or at their low of the session. Again, it's a Sunday evening, so there's not a lot of movement, but you can see right here, this is essentially a volume profile, or another way to tell is when the price is white, that means that something has traded at that price. So something traded at 06, nothing has traded at 05 yet. But you see, and the highlighted yellow is the current price at the last trade. So we're right here at the bottom. Right here at the bottom, we're at the low right here, and a little bit off the low on the 5 years. So that is what you are looking at on kind of a macro level. Let me explain what you're looking at within any one given product. I have an extra column here on the 30-year and the Ultra Bond. But let me go through them really quick. I want to focus more on what I'm looking for. So all of these columns aren't going to be as important. Obviously, the gray column is your price. The column to the left of it is essentially a volume profile. How many contracts have traded at this price? The colored ones, let's see. So if it's green, that represents Jigsaw figures out where the bulk of the volume has traded. So again, there hasn't been a lot of range, so most of these are green. orange is the VWAP. I don't use that. It comes pre-set up and I just never turn it off, but I don't ever honestly use this to make any decision. Pink represents, or fuchsia, represents the most contracts traded. So it's just a quick visual way to like scan across and see, okay, price of 18 is where the most traded. 15 here. And not so much what the specific price is, but it's more about where are we now relative to where most of the trading activity has taken place. Now, the Ultra Bond's a little bit unique here. Most of the contracts have traded right here near the low, whereas everything else, it tends to be usually in the middle of the kind of the histogram that you kind of naturally see form. Again, though, it's an evening, so these numbers are a little bit skewed. Not a lot of contracts have traded. So to just touch on what the other columns are. The inside green and the inside purple columns are the bid and ask. So if you were just looking at a normal kind of depth of market in, like Trade Evade or Ninja Trader, you would probably see only a few columns, and it would be the price, it would be the bid and the ask. And that's probably at your base level what you would see. So that would be prices obviously here, but this would be your bid and your ask. The outside green, the outside purple columns are changes to the bid and ask. So like you see a -9 here, -18. Like I said, these numbers constantly change. That represents what activity has happened to this price level since it last traded. Whether contracts traded at that price and reduced it, or people are just pulling their offers, or they're adding to their offers. So let's look at, right here. On the 30-year, the price is 16. You see a 128. It's changing, 126. And then you see a smaller number here. And part of that is because some of them trade it, 19 trade it. The rest of these are just changes in how many limit orders are actually sitting there. Again, that information is useful. We'll get more into that, but I just kind of want to explain what the columns are. The two columns to the right here are just basically a breakdown of the volume profile. How many times was it buyers coming up and hitting the sellers? How many times was it the sellers coming down and hitting the buyers? Just to give you a sense of where the strength is, the movement. Honestly, I didn't used to have this on here, and I'm not sure that I need it. I very seldom actually focus on these. The inside columns, honestly, are two of the most important. This shows actual traded activity. So limit orders can change. People can add to their orders, pull their orders. You get a lot of algos. So these numbers are just going to constantly be changing. This is what's actually traded. Now, that said, again, it's a Sunday evening. It's pretty sparse here on the Ultra Bond. Let's look at something like here, like the 10-year. You get to see it a little bit more. Now, these numbers will reset when the price goes back. So like, for example, 69, we can tell here 447 buyers came up and hit the sellers here, and also 69 sellers came down and hit the buyer's price. So you can get a sense of what activity is happening at what price level and who is doing the activity, the buyers or the sellers. So for example, right here, you see a number, that's how many contracts have traded, but was it a lot of buyers hitting sellers or sellers hitting buyers? So again, a lot of information to absorb, and I'm not saying there is one right way to like just take that in and make a decision with it. It's one of those things where honestly, trading off the DOM, I'm going to say, is far more of an art form than a technical skill. You really have to understand how to absorb all this information, make decisions based on what you're seeing, and then, of course, it goes further then into once you've made a decision, you've entered a position. How do you manage that position? Were you right? Were you wrong? How many ticks are you willing for a position to go against you before you admit you're wrong? All of those things in trader psychology. So I kind of want to just go down the list of the 4 things now that I've kind of explained what the depth of market is. Now, everything I explained is the same thing. This column right here on the far left is the order column. So if I was in an open, here, I'm just going to enter a position. I just have the sim account up, so it doesn't matter. So this will show your P&L, and if you put on take profits and stop loss, it'll show you the quantity, so 5, and it will show you your approximate position in the queue. If it doesn't know, it just puts up a V2 under. But here, for example, Q33, that means there's 33 orders ahead of me. Now, this is sim, so it doesn't really matter. But if it was the real world and this was real money and you were trading your account, that means that 33 contracts are ahead of your order and would have to be closed out before it would get to your order. So just something to keep in mind. So that's what that column is. I'm going to go ahead and just hit flat and get out of this sort of fictional position. So the 4 points I want to get to, and I'm going to try to keep this brief because I know I'm not known for being brief. Okay, guys, now that I explained basically what the setup is, what all the columns are, I just want to go through the 4 things that I've kind of written down that I look for on a high level, kind of macro level, at least give you an idea of what I'm looking for when trading the Treasury bonds. Now, I mentioned one already, and I'll just cover it a little bit more in depth here. The reason I keep all 4 of these depth of markets open is they do tend to trade in tandem. You're not going to find many situations where, for example, right now, the 5-year, the 10-year, the 30-year are all right at their lows, right? Essentially, this one's one tick off. The Ultra Bond is also at its low. You're not going to find too many situations where 3 are at their lows and the other one's at its high. You, in fact, probably will never see that. But you might find a situation where 3 are at their lows and the Ultra Bonds maybe just kind of hasn't caught up yet. You know, it's up here around 11, 10. That might be a good position to enter for a short because you fully expect them to catch up. But it also comes back to context. You know, these buyers and sellers might be waiting to see if the other Treasury products actually kind of crack the low. Maybe instead, the other 3 make their way back up to kind of the middle of the range, and the Ultra Bond was the one that was kind of, in quotes, right. You know, it was where it was supposed to be. So you kind of have to figure out which direction it's going. I would say, though, 9 times out of 10, if 3 of them are at the low and, you know, there's continued pressure down, chances are, you know, other product is going to catch up. Now, that's not the case here. Again, to be clear, I mean, it's already pretty much at its low. But if it had been, for example, up here, and it does happen, I would say I see this on almost a daily basis, where there's times in the day where they just get a little bit out of whack, and that's the situation I'm looking to capitalize on. So the second point I wanted to make when trading the treasuries and like what I'm looking for, so the first point was kind of on a more macro level. Like I'm looking at all of them and looking for opportunities kind of on the bigger picture here. When it comes down to a specific product, and I'm trying to see if there's one that will lend itself well to this example. Let's use the Ultra Bond just because it's here. Now, hopefully it doesn't move too much. Right now, you see there's only 5 buyers on the limit right here. There's 39 sellers. At a very high level, again, you know, just think of a marketplace. If you have 39 people willing to sell and you have 4 people willing to buy, chances are eventually one of those sellers is going to crack and say, okay, you know what? I'll sell at the lower price just to sell my goods. I mean, the market works just kind of the same, right? It's just typically it's moving a lot faster than that. So I'm looking for situations where you're seeing a lot more buyers or sellers. So sellers pile on. Now, good example there. Doesn't always work because guess what? Bunch of buyers piled on. They cleared this out. Now, again, Sunday evening. So it doesn't take a lot of contracts to clear out a position. You know, you're seeing 24, 36, and these numbers change quickly. So I typically don't trade the evenings, and this is why. It doesn't take a lot of orders to move a price a couple ticks, and if you're on the wrong side of that, you might get stuck. So the point number 2 is you're typically watching the buyers and the sellers, you're seeing the flow, and basically, I mean, to put it in very simple terms, what's the bigger number? You know, if there's a ton of sellers and there's only a few buyers, and you're seeing them kind of put some downward pressure, guess what? They're probably going to continue to put some downward pressure. So it's not brain science. This situation doesn't really lend itself to that example, unfortunately. But if this was a more fluid, you know, moving market, I would be looking at not just the current price. I also typically look at 1 and 2 price levels below. Now I give it a little more less weight. I don't have some fancy calculator doing anything. I'm just eyeballing this. I'm looking. Okay, you know, if buyers start piling on at like the 2, 3 price levels below and sellers do nothing or start pulling their orders, guess what? Good chance they're going to push it up. So I think we beat that point to death. Point number 3, so it's not just about how many orders are on the bid and the ask, it's the change, which is this outside column, and this is why I have it here. So it's not just that the number is maybe bigger on the bid than the ask. You know, are people piling on? If it's bigger and people are adding on more contracts, and at the same time people are pulling their orders from the other side, just more credibility or more potential, I guess I would say, that in the example as I laid it out, the buyers are going to press this higher because the sellers are thinning out, the buyers are adding on. And remember, it's an information game in a sense that, you know, the sellers can see that the buyers are piling on. So if you're a seller and the price is currently 10, you know, do you want to be one of these guys if you think these are going to get cleared out? No, you'd rather sell for 11. So you see sellers start to pull their orders, and guess what? They will add them on up here. Now you're kind of seeing some of that in play right now. You're seeing buyers piling on and you're seeing sellers just disappear. Orders are clearing out. Like it took, so for example, right here, it took 2 contracts to clear this price out. There was more than 2 limit orders sitting there, but what happens is people see that's about to trade, they pull their orders, they move the price levels up. Now you have a lot of sellers. Notice right up here at the high of the day or the session, and the market's actually only been open just about an hour at this point. You have a lot of sellers here. Now these could be people who got into positions down here and as buy orders and are just looking to liquidate up here at the high, or it is other people who are looking to go short and expecting this to not really push through. They want to go short at the highest price they can, and then it's all profit if they can get it back into the kind of trading range. Now in the evening, it does tend to trade in a range a little bit more. And that is actually my 4th kind of point that I wanted to explain in this video. The evenings tend to be a lot more rangy than the day. Now, the day can trade in a range, very much so, but there's a lot more activity happening during the day. The evenings are a little bit slower. Nothing is set in stone, but if I was to be trading in the evening, and especially, let's say I'm trading one of these slower moving products, like the 30-year right here. I mean, it's traded at 6 price levels in the last hour. So if it got up to 20, but it got there kind of lazily, no real, fast pressure, no big sales. It's just, maybe people are pulling their orders, so it's an easy walk up here. I'm probably looking for a position to go short at that point. I don't think it's going to continue its run up. This is just buyers and sellers kind of going back and forth, trying to take advantage of each other. Again, it's a Sunday evening. So in slower times, I'm looking to basically play in a range. Now, another kind of possibility, again, this is just what I do. You can do what you want. And part of why I like the treasuries is it has a big per tick value. And in these slower times, you can put on a lot of size and 1 tick. So let's just do this. Let's say I trade 10 contracts. So let's say, and sometimes you get this phenomenon where there was nobody at the bid and ask for the current price. So I'm going to, let's try to find a position to enter. I'm just going to go long here just to demonstrate it and see if we get filled here. Now something has to trade even in sim, like, okay, there we go. If I go long 10 contracts, every tick is $312. That's not too bad. So you could be seriously looking for a 1 tick take profit. If you do it with size, there's good opportunity there. Now, if you want to lower the risk, you go to one of the slower moving products. 30-year treasuries. You set a 1 tick take profit. Again, it would be the same value. So 30 years trade at the same per tick value as the Ultra Bond, which is $31.25. That is why it is $312.50 for 10 lots. But nonetheless, just an example of one way to maybe take advantage of the slower positions. Now, I don't know that this position is going to work out. I kind of just wanted to get into one to show you what the values were. But if I was waiting for a good time to enter, a few minutes ago when we saw buyers adding on and sellers pulling, that would have been a good opportunity to just look for a 1 or 2 tick move, and it could be big value. So guys, I think that is it for this video. Now, this is no way extensive, everything I look for. One of my favorite trades is playing the highs and the lows. We're not going to get that tonight, and that needs to be when there is a lot more activity. So I will save that for another day. I'll do a video at some point when the market's actually open and things are really moving, and try to point out some things that I'm looking for and doing on those days. I'm just going to go ahead and flat this. It doesn't matter if it works out or not. It was really just to demonstrate it. But that gives you 4 ideas, at least, of how to use Jigsaw, what I'm looking for in the treasuries. To recap just quickly by name. 1, I'm looking at all 4 treasuries, and I'm looking for them to be in line, or more importantly, to be out of line, and look for opportunities to jump in on the product that is kind of out of line. I mentioned, I'll just point this out right now. Notice how they are all pretty much at the middle of their range. It's a little bit on the higher side here, like by a tick. You have to give it a 1 or 2 tick, kind of leeway, but it's not like one's at the low, one's at the high, one's in the middle. They're all pretty much in the middle. 2, I'm looking at the buyers, I'm looking at the sellers. Who is kind of in control at the current time. 3, I'm looking at changes in those buyers and sellers. So it's not just what orders they have in right now. It's what are people doing on top of that? Are they adding to them or are they pulling orders? And then fourth, I'm looking at this range and I'm just looking for possibilities in the range, expecting it to stay in the range. Looking at the 30-year, for example, look at this. Like there's 4 price levels that have traded almost a very similar, number of contracts. So I would fully expect this to stay in this range. If I was to take a trade without any other information, I would try to make a trade looking for this to bounce down and bounce back up and just play this range. Now, no guarantee, of course, again, but just to point out some things I look for. So hopefully that's of some help to people interested in Jigsaw, interested in the treasuries. I am fully aware it is not for everybody. I'm fully aware a lot of people consider it boring, but I pose the question to you, are you looking to make money or are you looking for excitement? Because I feel like a lot of times when I talk to traders, they are looking for something exciting and fun with lots of movement and they're looking for an adrenaline rush, and I I'm here to tell you that will probably burn you out in the long run and probably lead to some situations where you get a little bit caught up and maybe some positions go against you and you get screwed. So I'm going to leave you with that, guys. To end on a positive note, though, trading is a skill like anything else. It takes time to develop. I encourage you to just focus on one thing at a time. Get good at it. If you really like it, then continue on and learn more. Add your backpack of tools and just become a master of it. That's my opinion. And I'm going to leave you with that. Thanks everybody for watching, and I'll see you in the next video.